Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 343 on October the 4th, 2024. I'm your host, Eric. And in this week's show, we'll cover the trades from last week on CleanSpark Inc., American Airlines Group Inc., and Xpeng Inc. And we discussed three new trades on Nikola Corporation, the Silver Trust ETF, and the KraneShares CSI China Internet ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week with even less of a week-over-week change than last week. The Dow Jones Industrial Average gained 39 points, closing at 42,352 points. The S&P 500 index picked up 12 points, ending the week at 5,751 points. And now it's time for the topic of the week. The topic of the week is exiting a trade early. How often do you hold a position until expiration, or do you typically exit early? That's a really important question because it'll affect how you manage a position in all of your trades. So when I first learned to trade options, we were trading delta neutral. There are very few reasons to close a trade early. We mitigated the risk of a trade by hedging with stock, and then we managed the size of the stock position until the option expired. So we just managed the price risk of the options. We never really exited early. Now, as a retail trader, I've learned the hard way that sometimes you need to exit a trade early in order to capture a profit or have another solution like creating a box or something like that. Now, there have been several times where my trades actually worked out, but then I held on. And after a while, the trade ended up working against me and I lost a little bit of money. That always just angers me, to keep it clean. Now, sometimes it's just better to take the profit. You can always decide to re-enter the trade again if the stock continues to move in the direction you expected. And if the stock does end up moving the other way, you'll be happy that you captured a profit rather than letting that profitable trade go negative. That is the worst feeling, letting a profitable trade go negative. Now, this is all about trade management. I personally have found that trade management is a code word for mental management. It's Eric management. Now, I have to make sure that I am seeing the markets clearly rather than hoping something is going to happen. Keeping my mind focused and free of emotion is one of the most important things I do while I'm in a trade. You'll always want your trades to be as profitable as possible, but you don't want to let them go from profitable to a loss either. And if exiting early keeps you from losing, take the exit. All right, let's get into the review of last week's trades. We're going to start off with our covered call on CleanSpark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time, the stock was trading for $10.13 per share. I looked at buying stock and selling the October 10-half call at 81 cents. That could give us a return of 11.65% in 3 weeks. Well, shares of CleanSpark lost 55 cents, ending the week at $9.58 per share. The call option we sold lost 48 cents, leaving us with a net loss of 7 cents on the week. The stock price is still above our break-even point, so we don't have to make any adjustments on this trade at this point. With 2 weeks left until expiration, I'm more interested in seeing if the stock is going to turn higher or if it's going to continue a path lower. I'm actually happy to hold on to the stock into the next month after expiration in order to sell another call option against the shares. This will likely offset any losses produced by the stock and put us into a profitable trade overall. Now, with 2 weeks left, I'm going to track stock closely and make sure I fully understand the plan for making this a profitable trade over the next couple of weeks. Next up, we have the credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $11.57 per share. I looked at selling the October 11 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of American Airlines lost 6 cents, closing at $11.51 per share on Friday. The out-of-the-money put spread that we sold is still out of the money, but our short put option is 2 cents away from being in the money. Given what we collected for selling the spread, this trade is still profitable. Said another way, the stock price is still above the break-even price, so this trade is looking just fine. No adjustments are needed on this one either, but if stock does start to head lower, we will need to have a plan on how to manage this trade as well. And then our final trade from last week is the debit spread on Xpeng Inc. Symbol X as in X-ray, P as in Papa, E as in Echo, V as in Victor. At the time, the stock was trading for $12.71 per share. I looked at buying the October 12 half call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Now, shares of Xpeng grew 10 cents, ending the week at $12.81 per share. The in-the-money call spread that we bought is still in the money. This means that this trade is currently winning, and if it ain't broken, don't fix it. No adjustments are needed on this trade at this point at all. Definitely keep track of it over the next couple weeks before expiration. So that's it for the trading review of last week's trades. We're going to get into the final set of trades using this October 2024. Really, it's the October 18th expiration. So these are monthly options that expire in the month of October. 2 weeks left to expiration. So because of not having as much time left to make any adjustments, that means that each of these trades are inherently a bit more risky. So as always, follow along more for educational purposes. And if you have any questions, you are always welcome to send me an email. So our first trade is going to be the covered call on Nikola Corporation, symbol N as in November, K as in Kilo, L as in Lima, A as in Alpha. The stock ended the week at $5.03 per share. I'm looking at buying stock and selling the October 5 half call at 11 cents. That could give us a return of 11.53% in 2 weeks. Now you enter this trade by buying stock for $5.03 per share and selling the October 5 half call at 11 cents. This trade makes the most money if stock prices finish above $5.50 per share. The break-even price is $4.92 per share, and in real terms, that stock purchase will require $503, and you'll collect $11 for selling the option. Next up, we have a credit spread on the Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. The stock ended the week at $29.36 per share. I'm looking at selling the October 28 half put spread at 11 cents. That could give us a maximum possible loss of 32 cents per spread. Now you enter this trade by selling the October 29 put at 58 cents and concurrently buying the October 28 half put for 40 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $29 per share. The break-even price on this trade is $28.82 per share. In real terms, you'll receive $18 per spread that you sell and have $32 at risk. And then our final trade on the week is going to be a debit spread on the KraneShares CSI China Internet ETF. Symbol K as in Kilo, W as in Whiskey, E as in Echo, B as in Bravo. The stock ended the week at $38.39 per share. I'm looking at buying the October 37 half 38 call spread for 31 cents. That could give us a maximum gain of 19 cents or a 61.29% return in 2 weeks. Not too bad. Now you enter this trade by buying the October 37 half call for $2.69 and concurrently selling the October 38 call at $2.38. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $38 per share. The break-even price on this trade is $37.81. And in real terms, you'll pay $31 to enter the spread, and your maximum gain is $19 per spread. So that's it for this week's show. Thank you guys once again for listening. I always appreciate every listen I get. I also love the emails that I get from you guys. I've got the best listeners, seriously. I don't know of another podcast that has people as amazing as you guys. You're engaging, you ask thoughtful questions. I get a kick out of it. Like it's awesome. And it's about options. I mean, come on. We're not exactly talking about the latest gossip for movie stars. No, we're talking about options. So the fact that you guys tune in lets me know that you want to learn. You're very interested. You like to hear the trades that are out there. And I love getting the emails. So, hey, if you've never emailed me, seriously, what are you waiting on? I only ask you every show. Send me an email and say hello. Let me know that you listen to the show. It's awesome. And for those of you who have emailed me and who continue to listen, you're awesome. Trust me, top of my list. That's enough for me for the week. I hope you guys have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.